Good afternoon, everybody. Today I got to chat with the great Todd Bubba Horwitz. In this interview, we talk about the China-Taiwan conflict. We talk about where Bubba thinks commodities are going to be going in the near term. Bubba tells us why he hates earnings season. And we even get to hear about the daily routine of Bubba himself. Guys, I really appreciate that you're taking the time to watch this. So please go grab yourself a cup of Joe, a Bud Light, a Coca-Cola Classic, whatever your drink of choice is, and sit down, enjoy, and let us know what you think in the comment section. Todd, thanks so much for joining us today.
Steve, great to be back with you again. It's a pleasure.
It's always a pleasure when you hop on here and chat with us. It's when my producer Chris books it and I see it on my calendar, I'm always super excited to talk to you. So let's get started here with what's happening right now between China and Taiwan. Just today, the news sort of broke that Biden is looking to pass the Chips and Science Act, which includes $52 billion in subsidies for domestic production of chips in the U.S. Do you think that the U.S. can really compete with China when it comes to these chip production?
The question is, could they or would they? And they could. If we wanted to compete, we could. Okay, but typically, unless there's some special perks in it for Biden or his kid or somebody else in the political industry, they don't normally want to produce here because they get too many kickbacks from over there. And that's one of the biggest problems we have is all between all the lobbyists and all the things that go on. Okay, we could certainly could compete. I mean, certainly an American would be willing to pay a few cents more to get production here than having to ship it over. And besides the fact that now the price differential isn't so great with all the outside costs of getting things here.
Mm-hmm. And it's not cheap to get into if we want to start moving some of these foundries over to the U.S. Or TSMC plans to invest $100 billion over the next 3 years to start producing chips in Arizona, which I can't seem to wrap my head around because my understanding is that foundries use a tremendous amount of water. But we're going to build these factories in Arizona for some reason.
Well, it's kind of like, we want to go to EVs here, which is fine. And I understand all the things they want to do. But the one thing they probably have to do first, Steve, is fix the power grid so that A, it can't be hacked, and B, it actually could operate. Because if you had all that technology and ready, first of all, you have to learn to desalinize water, which is easy to do to create the water, but they don't want to do that either. Remember, one thing we know about government for sure, it always comes back down to money, kind of like business. And if they can't make any money out of it, there's no getting it done. So obviously, if somebody's investing $100 billion in Arizona, they must believe they can get the water, or they know they can desalinize it and they're going to ship it to themselves. I mean, there's a way they're going to have to do it because, living in the desert part-time, we're short water.
Yeah. And that's a huge number, $100 billion, according to Reuters. That's not exactly small potatoes. So what do you think is happening right now between China and the U.S.? Where do you think that this is going? You think that China's economy is in a place where China can't really do anything? Or do you think that their economy is in such a bad place that they have to do something to try to stimulate their economy?
I think China's in as good shape as they want to be. One of the problems is, Steve, you don't get real information from China. We really don't know all the data, but we do know that they are obviously the worst for human rights, and they've got lots of billionaires there. And the middle class has stepped up a little bit, but they're still basically a slave nation, a communistic slave nation. So I think their economy is fine. I think that they're working their 100-year plan is said, and I think it's only been accelerated by the actions taken by the United States. I mean, they've gotten pretty tight with Russia now, and of course, their goal is to get to be the reserve currency or some version of it. And, we know they're going to take through Taiwan. I mean, this has not been a surprise. They actually have been taking towards Taiwan because they know that we're not going to step in front of them as past administrations would have. And, this is one of the big problems that we're seeing. China wants to take over the world. That is their end game. And they are on a 100-year plan. They're not in a hurry. But because of what's happened in this country now and with the leadership that we have, it is being accelerated that they'll be able to do it faster. And I think you look at a lot of these shutdowns for COVID, I think that's a bunch of BS. I think they're shutting down to more penalize the United States and continue to slow the supply chain, making our prices so much higher.
So I got to ask then, what do you think Biden could be doing differently that would be having a better impact on the economy?
Well, the first thing he should be doing is he should be drilling oil, right? We should be shale and fracking because, again, we've got the oil. The carbon footprint's not going to change because you get it from Saudi Arabia. It's still going to be burned into the atmosphere. Okay, so we haven't stopped our usage. So why aren't we drilling and ourselves here? Why aren't we a net exporter here? Why aren't Americans paying $2.20 a gallon instead of $5 a gallon? That's this where it starts. Plus the fact that we could be helping the UK and Germany, who are dying and devastated by Russia right now, okay, because Russia's holding them ransom, and of course making them pay in rubles and making them pay more money than they'd have to. I mean, natural gas in Germany is quadrupled over the last year. Okay, plus add in one last thing: if you're going to put sanctions on a country, you have to hurt them financially. Well, if you're not drilling oil here, we're not hurting them financially. They're sailing along fine. And what's going to really happen, we're going to have a food shortage because Russia and Ukraine create 30% of the wheat crop in the world.
Okay, so shifting gears here, let's talk about the Fed for a second. You and I have spoken about this for over a year now. Look, rates are deeply negative. That being said, I didn't expect the Fed to actually act this aggressively. I mean, it's 75 basis points here and there. Are you surprised that the Fed acted this aggressively?
No, I think the Fed is kind of in bed with government, and I think that central banking around the globe, the fiat currency system is one of the most fraudulent systems there are. It's basically taxation without representation is where they can really take out more money. So is it a surprise that they're hiking into a recession? Well, they want to change the rules on what a recession is. Okay. But if you really want to do the math, Steve, take the CPI, which the last CPI was 9.1, okay, and subtract the 10-year. So we're really at negative net rates nominally at about 6% right now, even with their hikes. So at the end of the day, they're doing nothing. It's basically lip service, but not helping the economy.
Yeah, and I'm going to steal the talking point from George Noble. But when you actually factor in what's happened with housing using objective data, we can probably add another 6% to CPI, and that's not like shadow stats, kind of questionable data inputs. That's like factually CPI is probably somewhere
20.
Between 4 to 7 points higher, and that's on the low end.
I think it's over 20.
You think it's 20?
I'll be honest with you, and not to cut you off, but I think that inflation's at 20% or more. Okay, I mean, just look at the numbers. I mean, it doesn't take a rocket scientist to know that gasoline's up over 100%. Okay, it doesn't take a rocket scientist to see that the grains that are in the ground have doubled in the last year. Okay, those are pretty damn big increases, and they slight food and energy, and they only weight them at a certain percentage, which basically the American family or families across the globe, their two biggest costs other than emergencies are food and energy.
Yeah, we're dealing with it here in Canada. We've got nursing shortages, teacher shortages. When I graduated school 10 years ago, becoming a teacher in Ontario was impossible. I knew so many people that they go 3-4 years supply teaching, just begging to get a gig. In 2014, the first year teacher unemployment rate was 38%. Today, it is under 1%. And I wonder if we're talking about nursing or we're talking about teachers, and those are just two stats I'm pulling up, how much inflation actually impacts people where they say, you know what, it's just not worth it to deal with everything that COVID's created. I don't really want to work that much. And my dollar's not going as far with inflation. So you think that we're going to end up in a place here where we're going to have workers around the globe, or at least, in the US and Canada, start to walk into their bosses' offices and demand more money?
I think they've done that already. And I think we were starting to see the result, which is what really scares me the most, Steve, is stagflation. We get an unemployment report, right? And they're bragging about how big it was last Friday. Now, first of all, they use the wrong data. They're using the U3, which is 3 months data versus 6. If you look at the number of people that have dropped off the payrolls, the numbers were not that good. We've only really replaced the jobs that were lost during COVID. You can drive down. I'm in Vegas now, which is my other home. You can go by every store. Everybody's looking for help. There's not one place, and they're not paying minimum wage. You're paying 2-3 times minimum wage, and they still can't get help. People don't want to work because, again, their dollar doesn't go farther, because they do get some perks or some benefits. They've gotten enough going forward, and they're just not going to pay their bills if they can't do that far. We have debt, which is at record levels again, from the average Joe. And, you look at what's going on in, the banking system. They keep telling us how great the banks and what great shape they are. I'd like to take issue with that, because I think if we had a true audit of the banking system, we'd find out that they're severely over leveraged once again.
Mm-hmm. What's it like in Vegas right now in terms of just service jobs? I spent quite a bit of time in Florida last spring, and I noticed that a lot of the Dunkin' Donuts I'd go to, or just regular restaurants, they were understaffed, and it was very typical to see a Dunkin' Donuts. I'm from Canada, so I need my coffee in the morning.
Of course.
Either the drive-through, drive-through only, and they shut down the actual restaurant because they couldn't hire enough people. Are you seeing things like that in Vegas?
I'm seeing that everywhere, Steve. You're seeing it even in the hotels. I mean, the hotels are packed. Okay, Vegas, they don't know from any recession in Las Vegas, right? They didn't know from COVID, even when it was in COVID, and they can't get any help. Okay, that's another. They can't get help, so you're always waiting for service if you can get in. And most of the fast food restaurants, which you're talking about, Dunkin' Donuts or whatever, they're drive-through only. You go by, the drive-throughs are 50, 60 cars deep because there's no dining room to go into. And that's going on all over. And that is destroying a lot of the smaller businesses because, they can't afford to hire people.
What do you think the chances are that we see high interest rates coupled with quantitative easing?
I think the chances are greater that we see a collapse of the economy. I think there's a greater probability of a collapse of our system once again, but like 50 to 60% of the equity market. I think we have very few jobs. You've already got so many major problems that you've created. Okay, not to mention the high costs, but the travel industry is under pressure. The airline industry obviously is under pressure. Everything is under pressure, and yet you've got rates rising. In fact, in Vegas right now, if you're going to buy new construction, you have to be able to qualify for a 7.5% mortgage. Okay, I squawked 6 months ago when I bought a house for my son at 4%. Now there's 7.5% that you have to qualify if you're going to buy. This is going to be ugly.
Mm-hmm. Do you think it could look anything like 2008, 2009, or was that just a whole different?
I think it ends up looking worse when it's all said and done.
Wow.
Wow. Listen, you've duplicated, housing. For example, remember in 2008, now actually prior, right? Houses were more liquid than stocks. You put them up, they would sell over list. Okay. Mm-hmm. Now suddenly the Vegas market's slowed down. I live in a neighborhood. My neighbor's trying to sell their house. Usually they would sell over list in a day or two. They've had it listed now for a month. Can't sell it. Okay. All of a sudden you're seeing a lot of changes around. And, again, remember, we've allowed ourselves to get deeply in debt, and of course the credit card lobbies won't allow bankruptcy on credit cards, but there's a lot of debt out there, and they let the banks go past 10-to-1 leverage for quite a while. So, the banks are over leveraged. So this is going to be a nightmare, which will once again be taxing the middle class and bailing out the banks once again, would be my bet.
Okay, so I got to ask, are you net short the market right now?
Nope. I'm actually today. I'm always net long, Steve. I'm hedged. I mean, I know exactly where my exposure is on my IRA, 401k, profit sharing, those equities. That stuff's mathematically sound. I buy there every day. The market goes down X percent. That's buying automatically. It's taking the money that it made from the hedge to buy. And the equity markets right now, I'm actually long at the moment. Why? Because of my algorithms say that we have more room to go on the upside. So I will get short when it's time, but I won't, as much as my opinion says that there's a bad thing happening, I still have to trade by the rules of how I trade. And my algorithms are still long. I'm still long equities. I'm still long bonds, which I hate. I'm short crude, which I'm not so thrilled at right at the moment because I think that crude's going higher. But again, whatever my numbers say, that's the way I play them. And I do not deviate when I'm trading.
So looking here, over the last month, the return of various meme stocks, we got Bed Bath & Beyond up 124%, AMC up 63%, GameStop up 35%, Tesla up 15%. That's the last 1 month return. You think that this is just a quote unquote bear market rally?
Well, I think the meme stocks are like an animal all to themselves. You get a bunch of young Robinhood traders that are just firing and have no idea what they're firing at. And you see crazy moves like this. Those are thinly traded, heavily shorted positions that get these wild trades. I don't get involved in any of those. In fact, I stopped playing Tesla because I kept trying to short it because I love the car. I just couldn't understand the valuation. So I quit trading it altogether. But overall, the GameStop, they don't make any money. How are they going to ever survive? I mean, we have to remember one thing. At the end of the day, you got to make money to exist. And those guys don't make any money. They lose money. And at some point, this whole shell game that they're playing is going to fall apart. I've been through this before. I traded on the floor in 87. I traded on the floor in the 90s through the internet bubble. I traded on the floor in 08. So I've seen these things happen before. They always end the same. The question is when, and that's the answer I don't have.
So I got to ask you, commodities. What's your outlook near to medium term for commodities?
Well, I commodities in general. You want to do it gold and silver?
We can go through them all, but let's start with gold and silver.
Soft commodities right now. I'm going to just give you my positions real quick so you know exactly where I'm at, and then I'll tell you what I think.
Yeah.
Grain markets. I'm long soybeans. I'm short corn and wheat. I'd like to long them all. I think they're going to the roof. Okay. Cotton and the rest of them, sugar, cocoa. I'd like to be long them all. Right now, I'm short those. Okay. But again, I'd like to be long them. I think they're going a lot higher. Silver, I just reversed today. I'm now long silver as of this morning. Okay. Gold, if we stay up here, I'll reverse that probably tomorrow and I'll be long gold. Platinum, I love. Platinum, I think is a value. It's a value play. But again, there's one big thing I want everybody to understand. I buy physical silver, gold, and platinum on a regular basis. Okay. It's part of my net holdings and equity in my portfolio. When I'm trading paper. Okay, either long or short, but I'm never going to accumulate paper as a long-term hold position. If I'm going to hold it, it means I can afford to hold it. I'm not going to be forced to sell it, and I'm buying physical metals. And I think you're making a mistake because I don't think there's enough gold in the world to cover all the paper that's out there.
I heard a theory this week that just seemed kind of interesting to me in terms of an epic trade. From a guy, he doesn't want me to mention his name, but he said that he thinks that when the Fed does pivot, you're going to have an epic trade on gold. You think? I
think you're probably right.
You think that's?
I could believe that. Listen, gold has been under so much pressure and so compressed recently. You hear about the manipulators. Right? Everyone's talking about gold manipulation. It's really spoofing, which is something that every human being in the world spoofs something. I mean, again, that's. There's a fine line between manipulation and spoofing, but we all do it. If we're selling a product, we're making it more valuable than it is or less valuable, depending on which side of the market you're on. I think gold is at some point here going to explode along with platinum and silver. Okay. And again, I think it will be an epic trade, but if you try to time when it is, you better make sure that your capital position can withstand not being right for a while, because usually what happens is people get too involved and they get too leveraged up and they're forced to get out before the epic move shows up. And then the epic move shows up and they got nothing. So that's why it's very important to not over leverage into this. But yeah, I could certainly see that coming. And I mean, listen, is it tomorrow? Is it next year? I don't know. Okay. But I could see gold going to 3,000, 2,500. Okay. I mean, obviously I'd have to take out the highs first, but I could see 2,500. I could see $40 in silver. I could see 50 again in silver at some point. And certainly platinum at one time was over gold. Now it's under. So I could see the whole metals world going bonkers at some point. Okay. Mm-hmm. But again, I'm always an accumulator of the physicals, and if from paper, I'll be whatever my algorithms tell me to be.
So going into earnings season here, what are you watching? What are you interested in?
I've given up on listening to what earnings are. Okay. Because they're not manipulated. They're fixed, right? They're going to most companies try to over deliver, underestimate and over deliver. So they get money buyers for their stock. Okay. It's become almost laughable when you watch Apple and Google and most of those that are always under promising and over delivering, which is not really accurate. There's no way that any companies can really be making their net earnings right now because they're not getting enough supply. There's too much of a shortage of the supply on the supply chain. So they're not getting the goods that can actually make their numbers, yet they do the same thing over and over again. So to me, I play the price action of the market, and I use a lot of option types positions to create neutral positions, but will benefit from a large move in either direction of the market. Okay. And that's where we've been doing quite well, especially with the, coin the other day when it went to $110 a share. We were able to sell some calls at $50. So again, it's just something that you have to be prepared for, and you got to watch your leverage and how you're trying to play it, and you can't gamble. You got to have a method and an exit point if you're wrong.
All right, well, Bubba, thanks so much for hopping on here and joining. You're looking great, by the way.
Thank you.
I can tell you've been working out. What's the workout routine or the daily routine of Bubba look like?
The daily routine: 1:30 a.m. Go to the health club, and when I'm here, I go to the Las Vegas Athletic Center, and in Chicago, I go to Express because they're open 24 hours. 45 minutes in the treadmill, and then I lift weights for about 45 minutes, and then I run back here and go to work and start trading and teaching and doing my thing. And so every day, 7 days a week.
And so what time do you go to bed at?
Anywhere from 6:30 till 10:30. It depends. If I'm into a TV show, then I'm up late, and if I'm not, I can fall asleep. I can fall asleep anytime I want to. It's just if I'm stimulated, which is why I don't watch sports when I go to bed, because I usually have many. It keeps me up.
So you're one of those guys who functions on very little sleep.
Yes, I can function pretty well on 4.5 hours a day.
I see. I need my sleep, but there's nothing I love more than when I'm able to get up at 4 or 5 a.m. and the phone's not ringing. I can just focus on my work. I'm jealous that I don't know that I ever want to get out and work out at 1:30 a.m. like that, but I'm jealous by your routine. You look great, Bubba, and thanks so much for hopping on here and doing this.
Steve, it's great to see you, and I'm glad I got a chance to be with you again. It's always great to be with the Deep Dive, and I love you guys. You're one of my favorite places to be, so thank you so much.
Awesome. Thanks, Bubba.
Thanks, Steve.
All right, everybody, thanks so much for watching, and if you haven't already, please hit the like button, subscribe, and ring that notification bell so we keep making more of this content for y'all. All right, thanks, everybody.